Hey guys, welcome back to the channel. In today's video, we're going to be taking a look at my Robinhood portfolio and my M1 Finance portfolio. These portfolios I've been trying to slowly grow over the past 2.5 years for my Robinhood portfolio and about the past 6 months for my M1 Finance portfolio. So we're going to take a look at both of these, and I'm going to talk to you all about my slightly redesigned investing strategy. I decided to change just a few things up, and I'm going to talk about that in today's video. So with that being said, we'll go ahead and jump into my Robinhood portfolio. Alright guys, so here we are in my Robinhood portfolio, and the first thing that I'm actually going to talk about today is my revamped investing strategy. So I've kind of been thinking about it, and I really want to grow this M1 Finance portfolio. But at the same time, I want to keep this Robinhood portfolio going. So what I think I'm going to do is I'm going to take the dividends that I receive from my Robinhood account, and I'm going to put them in my M1 Finance account to be invested. And I plan to do that at least for the next couple months or so. In addition to that, I'm going to continue to invest money on a weekly basis into my M1 Finance account and hopefully grow that as fast as possible. I've been seeing the dividends come in that M1 Finance account, and even though they are pretty small, I do like seeing them come in, and it's provided a boost to me for saving and investing money. So because of that, I just want to grow that M1 Finance account as much as I can. So like I said, here we are in my Robinhood portfolio, and we'll start out all time. Well, actually, we'll start out on the day. So this past Friday was a really good day for the stock market. I actually ended up 1.63% up for the day, and for reference, we'll look at the Standard & Poor 500. That went up 1.4% on Friday. So, like I said, just a good day overall for the stock market. I did beat the stock market on that day by 0.23%. Like I said, that's something I always gauge my performance off of. I think if you all looked in the last video, I'd actually been underperforming the stock market a little bit. So it just kind of depends on the stocks you're holding, whether you're going to outperform or underperform the Standard & Poor 500. But like I said, it always is good to use it as a benchmark. So over the past week, that Good Day Friday kind of bailed me out. I ended up 0.35% thanks to that great day on Friday. Over the past month, I'm still down 1.64%. Past 3 months, I'm still down 2.15%. Over the past year, I'm up 4.7%, which I think is pretty good. And all time, I'm still up 10.36%. So what I did do is I had been accruing dividends in this account. So I actually withdrew $40 that I had received in dividends, and I took that out of my Robinhood account and I deposited it into my M1 Finance account. So like I said, I was talking about that strategy earlier, and that's exactly what I did. So going through these stocks, I'm not going to talk about too many of them, except for the ones that I really think are particularly worth talking about. I've talked about Chegg. Chegg is started. It seems like it's kind of starting to go back up. I do plan to hold that long term. I'm trying not to look at it too much right now, but right now it is encouraging to see Chegg go back up. Scrolling down a little bit, Apple is at $227 right now. It's actually really close to its all-time high. I bought most of my shares at around $175. Yeah, average cost of $178.29. So that's something I'm keeping an eye on. I do feel like there's the possibility that it could have risen a little too high, and I might actually try to sell off a share, capture some profits, and take that money and look to invest it in some value stocks. Not entirely sure what I'm going to do, but that is something that I've been looking at. Another thing I want to go talk about is Paychex. So this is a stock I bought, I think it was 2.5 years ago, and I bought it because a company I worked at, they use Paychex as their payment processor, and I just thought, I did a little more research. I thought it seemed like a good company. It's been a great investment for me. I'm up almost 43% on this, and they actually just had a really nice earnings report. So this has been something I've been really happy with as an investment. I will talk to you all a little bit about a stock that I have been considering investing in, and that is Caterpillar. So Caterpillar's just a stock that I really don't understand. Um, you know, Everything I see about them is more or less pretty positive. Usually they've had pretty good earnings reports. I guess this last earnings report, they didn't do quite as well as expected, and that's why I suspect it has not grown as much as I thought it would have. But Caterpillar's a stock that has, I believe it's a dividend aristocrat or close to becoming a dividend aristocrat. It's continued to increase its dividend for quite a while. And I don't think there have been any major cuts in the past, if I'm correct. But Caterpillar, like I said, it's just a stock that really confuses me. So we can look here, and for a while, back in starting in the beginning of 2016, it really took off. It went from it looks like about $60 at its low, all the way up to it was trading around 170 at one point. And the reason I really like this company is it's an established company. I think a lot of companies like to use Caterpillar products whenever they're doing any sort of building or renovation. They're obviously best known for their construction equipment that they rent out and sometimes sell. But like I said, over the past, year and a half, really, it just really has not performed very well, and it's just kind of confusing to me because I think they've actually raised their dividend a few times. So anytime a company's raising their dividends and their stock price is actually going down, that's usually a very strange sign. Sometimes it can signal that it's a very good value stock and it might be time to buy it, and other times it could signal that the company has poor leadership. Because if you're raising your dividend while your company's doing poorly, that's a terrible business strategy. General Electric was actually doing that for a while. They had some, it sounds like they had some kind of not shady but unusual accounting processes that made it look like their company was doing well when it really wasn't doing well. But yeah, so I just wanted to point out to you all, take a look at Caterpillar. Let me know what you all think about it. Leave a comment below. What do you all think about Caterpillar stock? Do you all think it's a stock that I should add to my portfolio? It's just really something that has perplexed me for quite some time, because I actually looked at its price to earnings growth ratio, and it actually looks like it's supposed to grow quite a bit in the future, which is really confusing me as to why it's trading at a 11.2 price to earnings ratio. So I don't know about that. Like I said, take a look at that. Let me know what you all think down in the comments below. That being said, I'll also show you all some of the dividends I've received over the past few days. So I actually have received quite a few dividends. So I got a Standard & Poor's 500 high dividend fund payment, 76 cents. I received a dividend from my Dow Jones Select Dividend ETF for $1.91. I received one from my Schwab Dividend Equity ETF for $2.91. I received one from my Healthcare Sector ETF for 75 cents. One from my Standard & Poor's 500 Growth ETF for 59 cents. One from Coca-Cola for 40 cents. One from my Standard & Poor's 500 ETF for $1.30. One from my Dividend Aristocrats Index for $1.09. And one from my Vanguard Mega Cap Value ETF for $4.02. So really not too much news this week. My portfolio is, doing pretty well, I'd say. It's stayed pretty even this past week. I actually finished up a little bit ahead, which is always a good thing. But no huge moves with any of my stocks. I guess Facebook's something interesting to talk about. So you all might have seen them. There's been all kinds of headlines about its new Libra cryptocurrency. Different banks and credit card companies have said they're gonna back their cryptocurrency, and then said they won't. I think there's all sorts of regulation issues. I don't know what's going to go on with that. I'm not sure how big of a deal it actually is. I think Facebook's a good company, regardless of whether they have a cryptocurrency going or not. I'm also going to talk to you all and show you all Snapchat. So Snapchat's actually a company that I bought in my retirement account on Schwab. I have a Roth IRA. So we're going to take a look at Snap, and it's actually has not done too well since I bought it. I think I actually bought it around $16.15, and it's down all the way to $14.52. And I think I bought around, it was 30 or 40 shares. Once again, this is something that I plan to hold for a long time. I think Snapchat's a good company for the most part. I am kind of curious as to see how they will make money. They have not had a quarter yet where they've had positive earnings. But like I said, I think they have a lot of users. Their user base is growing. You know, they do have a competitor with the Instagram Stories feature, but I don't know. I just see a lot of people spend a lot of time on Snapchat, and you know, I think once they figure out how to monetize their stories and, you know, figure out the best way to put ads on there, I think they can make a lot of money. But, you know, that's certainly one of the more riskier stocks I bought. And the reason I did that is because now's the time in my life for me to take some risks. You know, if I lose $500 on a investment in Snapchat, it's not the end of the world. I have plenty of time to recoup that loss. So, yeah, that being said, that's about everything I wanted to talk about in my Robinhood portfolio. And with that being said, we're going to move on to my M1 Finance portfolio. All right, so here we are in my M1 Finance portfolio, and I will show you all how it has performed lately. So all time, I am up 2.28%, and that is both a price appreciation in my shares and also the dividends that I have received. I received $3.24 in dividends all time, which may not seem like a whole lot, but what's really gotten me excited about this portfolio is I'm seeing more and more dividend payments, and they're for larger and larger amounts of money. So we'll go over to activity and look at some of those. So over the past week or so, I've received a lot of different dividend payments. They haven't necessarily been that big, but they have. There have been quite a few of them. So you all can kind of see them here. I got some from BAC, Bank of America, CPTA. When I started this portfolio, I picked out all the dividend aristocrats. I purchased some real estate investment trusts that I really liked, and then I sprinkled in a few other random stocks that I had really liked. So I have 100 different stocks in this portfolio. I know what most of them are, but some of them I can't necessarily remember off the top of my head just from their ticker symbol. But they're paying me dividends, so I'm pretty happy about it. Got a 3-cent dividend from T. Rowe Price, 4-cent dividend from I believe this is Public Storage, 1-cent dividend from BDX, 4 cents from CCI, 4 cents from DLR, 3 cents from Gain, that's a business development company, 2 cents from Land, that's a real estate investment trust, 2 cents from LTC, another real estate investment trust, 3 cents from Pepsi, which is a beverage company, as you all probably know. 3 cents from PLD, can't remember what that is off the top of my head. 2 cents from ADP, which is automatic data processing. Kind of more of a tech company, but they do pay a dividend, which is why they're in this portfolio. 1 cent from Berkshire Hathaway, 4 cents from Coke, 4 cents from GPC, which I believe is a real estate investment trust. I'll have to check on that. And then 3 cents from Kimberly-Clark, who kind of does a little bit of everything. You might have seen their name on like a paper towel dispenser in a bathroom at a company or something. So like I said, you know, these dividend payments are not huge, but as you can see, I received quite a few of them over the past week or so. And something I think I showed in the last video is these dividend payments are growing. I mean, if we go back to the beginning of when I started this portfolio, I was almost consistently always just getting 1 cent. Had had the occasional like 3 cents here and there. But for the most part, was getting very small dividend payouts. And, you know, their payouts now are not huge, but we are looking at like, you know, 3 or 4 cents here and there. You know, I get a couple that are 5 or 6 cents. And the more money I continue to invest in this, the better it will do. So this past week, I did invest additional $40. I pulled $40 out of my Robinhood account that I had received in dividends and invested it into this M1 Finance account. And it made the buys, as it always does. Distributes the money not equally across all the stocks, but it does try to balance my portfolio so I have an equal amount invested in each stock, which I've said before is a really nice feature because it's a good way to dollar cost average my investments. So yeah, not too much else to say about my M1 Finance portfolio. Like I said, I've loved seeing all these dividends come in. And yeah, I think with that, I'm going to wrap up today's video. If you all enjoyed the video, please hit the subscribe button. Please hit that like button down below. And like I said, please leave a message in the comments. What do you all think about Caterpillar stock? Should I buy it? Do you think it's a good investment right now? Should I wait for it to drop to a certain price? What do you all think? So thanks for watching today. Thank you all for watching today's video, and take care.